The breaking news on mortgage rates coming in at 6.81% for the fixed 30-year rate, slightly down for the week. However, rates have mostly gone up since the Fed cut interest rates, and that seems upside down. So let's bring in Corcoran Group luxury real estate advisor Catherine Juracich. So, Catherine, why are mortgage rates moving up in general when interest rates are moving down?
Hi, thank you for having me.
Yeah.
So the Fed set interest rates and the lenders set mortgage rates. So the two are connected, but they're not the same. Lenders take into account other factors, such as the bond market, and the bond market is sensitive to inflation. So we're still not sure where we're going to land on inflation. We're in a confusing time. There's administrative shifts. So depending on policies that are created around that will more correlate how these align.
So where do you see mortgage rates then settling in 2025?
So currently the national rate is around 7%, and in New York it's around 6.5% because of competition. The Mortgage Bankers Association says that they will likely be between, for 2025, 6.4 and 6.6. And I totally agree. I think that, we were propped up in 2020, 2021 by artificial 2 to 3%, but we are landing probably where we will end up in the mid-sixes.
It sounds like maybe the 3%, 4% mortgages we won't see those maybe in our lifetime.
I don't think we will. Yeah. I think that, yeah.
Yeah, so I know, unfortunately, right?
Unfortunately, I think that's gone.
Yeah.
I think you might have missed it.
Yeah, so it's well documented that the supply of homes is simply not there, partly because of that. Realtor.com is saying that about 35% of mortgages are between 3 and 4%, with 22% of mortgages below 3%. So those people, like myself, are not moving. That means higher prices, right? Because, still we're seeing pending home sales at a 7-month high, 2% for October. So the consumer confidence, are they still confident in making that investment then, even though, the supply isn't quite there?
Yeah. So you're totally right. There's a stuck in place that people that have 2 to 3% don't want to move because then they have to take on this higher mortgage rate. That said, year over year, we're up 25%. In the last 11 to 12 weeks, we've had double-digit contracts signed. Ooh. So the consumer confidence is really high. I mean, post-election, especially the last 2 weeks in New York, we've seen contracts signed at all-time highs. So, the supply is down, like you said, because people have not been selling. But I think that what will happen is people are going to get used to this new norm. So buyers are going to come out and, because confidence is high, they're going to transact.
Now, on the consumer level, we're starting to see consumers make choices, starting to buy the store brand over the name brand, shopping at Walmart over higher priced stores. Are you seeing that trend in homes?
Yes, I am. So I would say that, home buyers today are more savvy than ever. They really look at monthly costs. In New York, if you buy a condo, you have taxes and monthlies. So people are really paying attention to that. Also, people are going towards new development because they can get concessions. And I see people also looking outside their comfort zone in areas they think are up and coming. So, you're totally seeing those trends align.
Catherine, I appreciate it. Thank you for all of this insight, and hopefully we can all live where we want to live.
I hope so.
Yeah,
Happy
thank
Thanksgiving to you.
Yeah, you too.